Hello and welcome back to the Chart Pattern Trading Masterclass by Wealthy Education. In this video, I'm going to take a look at the bump and run reversal top pattern. So a bump and run is basically you have a couple of trend lines involved in it. So you have like an uptrend line, and this would be your main one. It's called the lead in. And then you get another one that's called the bump. So the market is chugging along and then it bumps higher. And then you have what they call the run, which is when it breaks down below the main. So basically, what you're seeing is you're seeing a trend, that may be going relatively straightforward. It's kind of chugging along, and then you get this bump higher, and then you break down. And once this trend line is broken down, you expect to find support here. But when you don't get it, that's a very bad sign. That's like a failure on multiple counts. Now, you hope to see that the market slices right through this. If it struggles a little bit, then it becomes a little bit murky, but you want to see it just kind of come right down. So let's go ahead and get rid of these drawings for now. Now, one of the cons about this pattern is trend lines. I don't want to say they're subjective because they're not. But if you look hard enough, you can find a trend line somewhere. Um, so, for example, I could draw it like this on Tesla, and you could call that a bump and run. It'd be a very noisy and sloppy bump and run. And notice how this trend line was tested again. So you have to be somewhat careful with this. You're kind of looking for not only this, but maybe some other things at the same time in order to confirm. I mean, you should always be looking for that anyway. But really, what you want to see is some type of huge deviation. So here's a reasonable trend line in NVIDIA, right? And notice how we just took off after that. Now, you could call this the bump trend line. We tested it and we fell through it and we just sliced through it. So, what do you really have going on here? Well, what you have is an acceleration of bullish pressure. And at this point in time, you're probably long the market anyways. But once you break this trend line, then you start to think, okay, well, has something fundamentally changed with the attitude of this stock? We drop down, we test this line, can't get back above it. And then we break through the main trend line. So, in a sense, this almost acts like the 200-day EMA for your longer term trend. This is the last vestiges of strength. You'll notice that NVIDIA, since then, dropped $80 a share. So it's not even that you're too late. I mean, we all want to be short up here. But the reality is it can't keep the longer term trend. And that's probably the best way to describe the crux of this. Like you get a little bit of mania and then you break down. And then the next thing you know, it's not even holding where it should, in theory, hold, right? So Bitcoin, again, the problem you're going to have with Bitcoin and all other cryptos, you're only going to have somewhat limited examples based upon the short trading history on most exchanges. But you would have an extreme version here on the 4 hour chart. I mean, this would be really extreme bump and run, but you can see that that's exactly what happened. We bounced from there, bounce, broke down, and then just crushed this trend line that goes all the way back several months. Go ahead and take a look at Ethereum. I mean, in a sense, you could say it here too with Ethereum, like going back basically ages in the world of crypto. You see this nice trend line here where things got out of hand. And then once the bubble popped, we tested this trend line and then tested this longer term support line, bounced quite nicely, came back to 3,600, which you can see has mattered multiple times, and then broke through the major uptrend line. That being said, this is kind of one of those situations where you see this. And really, what you want to be looking at this point is a signal, maybe on a shorter term chart, trying to find those moving averages rolling over, et cetera, et cetera. So let's take a look at Forex. British pound, Japanese yen. This is a very volatile pair. So this is the kind of market you do tend to see these in because it's so volatile. So you can see where I wouldn't call this a bump because there was a little impulsive area there, but it didn't really sustain itself. Now this, on the other hand, you could call that. And you can see we fell this long-term trend line and then broke through it, and it's just been down and out since. Um, and in fact, it took. See, this is 185. Yeah, we haven't even gotten close to it. Wow, it looks like it went back there. It's still 20 handles below. You can see how it lays out on a really stretched out chart. So this is one of those patterns. Um, the initial trend line breaking should have you thinking, okay, well, are we changing the trend or are we finding support? And then you look at the longer term support line and you say, okay, well, this is where the trend needs to hold. And if the trend fails here, then we have something much bigger coming down the road. So it's kind of hard to call it. It's not really a pattern. It's more like an observation. I mean, I guess technically it's a pattern, but it is a confirmation of a reversal of a trend more than anything else. So in the next video, we'll take a look at something called a diamond top pattern.